A failed assassination attempt on Trump over the weekend triggers a big rally in crypto markets as his odds of victory spiked to 70%. German government selling of Bitcoin looks exhausted, but potentially Mt. Gox still to come. And finally, the Ethereum ETF looks set to launch next week. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight, and today I don't have Dave with me from FRNT, but instead I've got Shaun Fernando from Deribit, and I've got Antonio Vulcano from Laser Digital. How are you doing, guys?
Good.
Yeah. Good to have you here.
Thanks for having us.
Yeah, likewise.
So, you're Chief Risk Officer at Deribit, so you're going to tell us all sorts of juicy stuff about Deribit today?
Yeah, all the risk, all the fun stuff. So yeah, I joined like 4 years ago. It was just after the March 2020 crash. Fun times to join. I think Bitcoin was around it bounced back till about 8-9K when I joined. And it's been a roller coaster ever since, and it keeps going. I think the interesting part is how like more mature the markets are, how it's really become an institutional playground as well.
And what's your kind of role? Are you kind of helping with the new product development and stuff like that over there? Like what do you do for those guys?
Yeah, so we would, like the risk team would be like looking at, for example, cross-collateral. We just recently launched that. Adding more products to cross-collateral, stuff like staked ETH. We are looking at improving liquidation algorithms. We're looking at launching new kind of stuff. You know, we launched the volatility index a while ago and how that's actually calculated. We designed that. So there's a lot of overlap with us and product. I mean, we do a lot more on the thinking about the risk of those kind of products and how they should be launched, how it should work, whereas product actually execute a lot of it, but they're also very involved in a lot of these discussions. And a lot of exciting new stuff, like how can we make margin more efficient for users? And then there's also maybe for some the more boring side, which is really the risk of looking at just the whole platform and thinking about what is the gap risk that we face. So this is like bread and butter kind of stuff. This is like one of the most essential things actually the risk team do, is to make sure that to really reduce that chance of a socialized loss event ever happening. Mm-hmm. So if we see that there's a big gap risk that we face with looking at the stress scenarios on the whole platform, we will take measures in terms of changing portfolio margin parameters to alleviate that risk, to capture more margin, so that, chance goes down.
And that's why you guys were one of the best at navigating the big FTX blow up, right?
Yeah, that was, that's actually something, again, we started changing parameters straight after that FTX event. It was, we were pretty much relatively unscathed. I mean, a lot of people trade on Deribit are not just, hey, we believe market's going to go up, let's buy. Mm-hmm. They're also trading a lot of different strategies, whether it's yielding strategies with your covered calls. It could be more like hedging, like insurance with puts and so on. So we've never experienced a crypto winter like a lot of these other exchanges. After an FTX event, they started letting people go. They started really downsizing. We just felt, okay, volumes were a bit lower, but it was still completely manageable. We still had people interested in trading options. I think then the whole issue was the custody play, and luckily we were early on that. So we had the copper clear loop. We were one of the first to have it. So a lot of institutions still trusted to have their funds with copper trading on Deribit, even after that whole FTX and everyone pulling collateral from all these exchanges.
Nice. And Antonio, tell us a little bit about what you do over at Laser and your background.
Well, in Laser, I'm a senior trader operating on the treasury desk. In the past, I've been trading equity derivatives for a long time.
Like myself?
Like yourself.
But you're a lot smarter than me because you traded exotics.
Well, it's not always the case because you don't really understand what's going on to the end. So it was fun, though.
Fine. But the thing, exotics traders either make ridiculous amounts of money or they blow up spectacularly, right? So I'm kind of hoping you weren't in the second camp.
I'm none of the two. So. And so, yeah, this is the new venture in crypto, which has, of course, a lot of similarities with the debut of the exotics in the equity space in particular. Of course, the asset class is really exciting for people that come from a TradFi experience like me, because it is a bit of a mix at the end of different asset classes. It's a bit of equities, a bit of commodities, and it can be seen as and also is connected to all the new technologies, and
it moves, unlike the S&P, which puts everyone to sleep. Right?
It does. It does move a lot, but we have to say that the vol dynamics have been evolving a lot in this space, and now they look as much more similar to what the tech stocks.
It's heading. I mean, Volt crypto. This is something we've talked about in previous podcasts. Like crypto Volt is heading lower and has been for years now. I just hope it finds a floor at around 30 or 40 and doesn't like turn into like a 10 volt asset like all these other assets that we trade or don't really want to trade anymore. But so what is your role then over at Laser? Like, are you hedging their portfolios? Like, what are you doing?
So my desk has two functions. One is internally optimizing the collateral management across the company, and the second one is facing external counterparties, where we trade bilaterally. What we do is that we trade on venues and OTC, and we trade derivatives. We trade the linear products. We're active on the borrow and lending markets, and we are active in staking.
And you're trading both OTC and also on exchange on Deribit, basically.
That's correct.
Okay, cool. We should probably talk a little bit about what's been going on in the market. So obviously, Dave's not here to do his usual amazing macro rundown, so I'm going to do my best. But basically, we did get CPI data last week that came in light, kind of confirming that disinflationary trend that we've been talking about. That seems to have nailed on a September rate cut out of the Fed. And in theory, that should be good for risk assets. We did see equities like that news. They've continued to kind of grind higher. Crypto was struggling a bit, though. Seems like the overhang from all the selling of the German government was making it tough for Bitcoin to rally. But finally, we got a bit of a wild card over the weekend with Trump, which I think we should all discuss a little bit here. That was quite something, right? I mean, we haven't seen that since Reagan. And I mean, his odds have gone to 70% now. And obviously people who weren't openly supporting Trump are now coming out of the woodwork and supporting him on the back of that and that kind of defiant stance that he took after surviving it. What do we make of this?
Yeah, very, very crazy times. I think as a person, very crazy that somebody got so close, I mean, to assassinating a potential president and a former president. And I mean, now that news is, I guess from the price kind of side of things, it was interesting how the market reacted to that news. So I think the market is really seeing Trump as your pro-crypto figure. Nice. He's openly said it. And you've got obviously a lot of kind of competing. I mean, there's always this narrative and the actual impact. So with Trump, there's this obviously narrative, he's going to be great for crypto, whether that's the actual impact when he comes in, if he comes into office.
Well, that's the perception.
Yeah.
That's the perception right now, isn't it?
Yeah, and you've got a lot of competing narratives with the whole Mt. Gox, that perception that will depress prices, when I think David mentioned last week that, a lot of that is most likely hedged. So actually the impact might not be as bad as people fear.
Yeah, whereas the German government stuff was not hedged, right? That actually needed to hit the market, and so that had price impact.
Yeah.
But the question is a lot of this Mt. Gox stuff hedged? I mean, I know I would have hedged it a long time ago if I was one of those holders, right?
Yeah, you're not going to ride it. I mean, with how much you've made, it'll be foolish not to hedge a bit of it, right? And I think some of it is for sure hedged. It's just a question of how much. I mean, a lot of it is OTC. A lot of it is claims on those funds that people have bought up.
But I mean, we had broken down the bottom end of the range. So we'd taken out 60K you know, we tested the mid 50s and now we're back up near 65k already. So question is, do we actually have a little attempt at taking out the top of the range now? Because that's held at around, what, 71, 72 for the whole year so far. What do you think on that, Antonio?
Well, the important thing is that all these events, first of all, are providing more clarity. The fact that Trump has a higher likelihood to be elected is not only positive per se because he's supporting crypto, but also because there is more clarity on what is the outcome of the election.
Mm-hmm.
Similarly, the fact that the amount of Bitcoin sold by the German government is going to the end, that's another positive news for the market.
Well, they've got none left to sell.
Yeah, and then the Mount regarding Mount Gox, we've seen it even over the last days. Every time there is a movement from the wallets, then the market will have a small corrections, but then it picks up immediately.
Mm-hmm.
So it doesn't have a structural impact. It might have a little effect on the announcement, on the news, but then I don't see it affecting the trend.
Mm-hmm.
And now we have a lot of positive support.
Yeah. And then the other big piece of news is it looks like we're getting finally, after waiting, and they kept kicking the can a week, 2 weeks down the road, but it looks like we've got a date out of the Bloomberg guys based on, you know, what they're asking for from the ETF providers, the SEC, for the 23rd of July. So that'll be this time next week. We should have some Ethereum ETFs trading, right?
Yeah, I mean, that's going to be another big one. Institutional money coming into Ethereum. It's going to, I mean, we saw what happened with Bitcoin with those announcements. And once it actually launched, I guess everyone will be looking closely at those inflows. Yeah, how much of it is priced in? That's the question, because Ethereum did have some moves before. But yeah, then we had all these competing narratives. It depressed the price a bit. That is pretty much now with, let's say, the only overhang being the Mt. Gox issue. I think I wouldn't be surprised if Ethereum pumps 10-20% very soon. Obviously, not financial advice, but it's
we're about 3,400 right now, so a pop to like near 4,000 again, basically, something like that. Yeah,
so I can say from, let's say, in risk in Deribit, what we look at in these kind of things, and what we were looking at very closely with those Bitcoin ETF launch, is those stress scenarios on the upside, especially, and we extend that even more than we normally would. So you obviously have an expectation based on the past, like realized volatility that we've seen. You've got an expectation on the future based on those implied volatilities. But in this case, you've got a huge potential tail risk event like on the upside. So that's something we really look at to monitor that gap risk. And if it goes out of, if we don't feel comfortable with that risk, then we will start increasing those margin parameters to actually capture more margin.
But isn't it a case of a lot of the people who play the upside, because the vol levels are quite elevated just in absolute terms, they use call spreads. And that takes a lot of the explosiveness out of that from a margin perspective, right? Because you're not just going to get this escalation where vol goes to 200 and they all blow up, basically, right? Because they've been given back the upside beyond that. So a lot of the market makers or whatever are actually short call spreads rather than outright short calls. Yeah, so that kind of mitigates some of that risk, right?
I mean, there are some, the market makers are generally pretty safe. They play things very, very risk neutral. I think it's more there's some big takers and maybe even takers who might be shorting the calls on Deribit and offsetting that with the OTC market, stuff like that. Okay. But we can't take it for a guarantee. Whatever happens outside the exchange, we have to manage that within. So those are the things that we kind of worry about that keep us up at night, let's say. But it's going to be interesting. I think generally when now we've got this momentum back after the events, I think it's shaken off that kind of skepticism that a lot of people were feeling. How much can the price depress? Where actually we were coincidentally speaking about this for the last 2 weeks in Deribit about launching a expiry for the elections. So the election date is the 5th of November. We will be launching this Thursday, the 8th November expiry to capture people who are interested in trading that. And there's multiple ways. Of course, now the percentages are more and more in Trump's favor. That can change, that can swing back and forth. It could be multiple kind of, there's a lot of different people saying, okay, Biden might step down. At some point, the pressure might be too large, especially with this upsurge in Trump's popularity. You could, if you get an issue with some the votes being contested or it being very close, then that date could actually push over the 8th of November, and when you get clarity on who's actually elected. And that could create some very interesting vol dynamics, vol moves on this expiry. So it's going to be an interesting one for institutions and even retailers to actually trade and have an opinion on.
It's interesting. Like the S&P, for example, has had a kink in its curve for a while for the election. And you can see that in a couple of places. You can see that on the S&P surface, or you can see it on the VIX curve. So obviously that's like the D-vol equivalent, right? And they price on the S&P, they priced an implied move of approximately 3% on the election, right? So I wonder what that translates through to a Bitcoin move. So if the S&P is expected to move maybe 3% on the election result, how much do you think, how many times that is Bitcoin going to move? Maybe 2 to 3 times that? Something like that? That'd be my guess.
Could even be more with the momentum. You're probably better at thinking about this kind of stuff.
Yeah, I mean, if we have to read the probabilities from vols, obviously there is an expectation first of all on an upside move, but it doesn't show any shock really on the ETF event or on the election. On the election, we have seen the upside skew persistent in the December and September maturities. Probably introducing another set of maturities around the election would be interesting for whoever wants to trade some gamma on those dates. But then that will become a kind of a bet on the levels that we should expect at that time. In terms of flow, what we have seen is that there were large holders of call spreads around the 100K level on Bitcoin, moving it around the 65 to 70K.
Yeah, they've shifted strikes down to like 70K-ish, didn't they?
So there's a kind of an expectation of some form of move, which is not dramatic. And that, to be honest, is more in line on what they expect on even on the Ethereum announcement, which is not really an event because everybody knows about that. It is discounted. And similarly to Bitcoin, the news will come probably from the amounts of the flows. Now, in the medium to long term, the vol market looks that it's predicting some form of upside move by the end of the year.
Yeah, I saw I checked it this week. So the Ethereum implied vol was trading as high as maybe 15 vols above Bitcoin in the short end. But now it's down to kind of 10-ish or maybe even a little bit lower than 10 because Bitcoin vols caught a bid this week on the Trump move. And ETH didn't need to because it's already elevated, basically. So that spread has converged a little bit.
Yeah, D-vol is trading 10 points higher, 64 around that. Bitcoin 54. And I remember last week you said you bought some puts and you kind of, as a hedge, and you then capitalized on it, right?
That's right.
Did you trade around this kind of Trump news?
No, so I had some Bitcoin hedges on still, but they've kind of shrunk as we rallied because that's what options do, right? So you spend your premium and then we rally and they go away. So I kind of, I was able to monetize my Ethereum protection and then just lean long Ethereum, which worked nicely. But I wasn't quite ready to kind of take everything off on Bitcoin because I didn't see this Trump move obviously happening. And I thought there was potentially still a final test of the low 50Ks before this correction was kind of done. Maybe it's done now. It remains to be seen. But I don't think we're quite out of the woods yet. So, until we get a firm break of 70K and that old range that we were in, then we're off to the races probably. And these kind of 80 to 100K strikes are in play again that people have been piling into. But until that happens, I wouldn't be overly surprised to see another wobble at some point, right? Maybe once the ETH news is out, yes, ETH maybe outperforms a little bit. If you look at the Ethereum Bitcoin cross, it's been kind of trading quite well, but it's kind of it's poised for a breakout to the upside, right? So that may well happen next week if we see, I mean, I don't know what the inflow numbers are going to be like, but obviously we've had about 17 billion of inflows into Bitcoin so far. Any idea on numbers of what we could expect on Ethereum inflows?
Very, very difficult to predict.
Yeah.
It's going to be a fraction of Bitcoin.
But the liquidity, in theory, it should have price impact though, right? Because it's going to take less money to move Ethereum than it is to move Bitcoin, I imagine. So I guess we'll find out next week, right?
Yeah.
It will definitely provide some form of support. So for the medium and long term, it is just a positive support that builds up.
And then any particular sort of smart trades that you're seeing out there, whether it's in ETH, Bitcoin, or even in altcoin space?
Well, as you just said, in up to a week ago, the term structure on Bitcoin was particularly steep, with the short end particularly low, and that has been just repriced with Trump. But the gap with ETH remains kind of structural. So even the ETH vol was above the Bitcoin level, and now it looks quite flat. So it ranges from the 60s in the front to the 75, 80 vol when you go into the March 25 maturities and beyond. Whereas Bitcoin is just repriced in the front. So the plays on the term structures, the classical one, remain are less interesting than before, but remains still quite appealing. Plays between Bitcoin and ETH vol are still there, and this is just looking.
Would you be a buyer of ETH to sell Bitcoin, or the other way around?
Seller of ETH.
Seller of ETH.
Bitcoin.
So you think ETH resets lower, right? So where do you think that spread should live? About 5 vols?
It might converge closer to realize, which remains quite
5.
below. Yeah.
Right.
So the interesting bit is also the volatility cone. If you look at the term structure on the last 6 to 12 months, and you look at the mid levels, we are just on the mids, which looks like the perception of the market has not changed despite the variation.
You're saying the historical percentiles of the implied vol are around median levels in the long end of the curve. That's what you're saying.
In the in all across maturities.
Across all maturities, yeah.
And so
that's after we've just had a little pop, basically, right?
That's correct. So it remains that the premium in vol remains quite high, and it is not justified by realize, which means that probably a play between ETH and Bitcoin is quite interesting, selling the ETH vol versus Bitcoin and waiting for the realize to do its job.
Okay. So you're like that's the way you would sell risk premium, basically, in crypto space. And what about alts? Like you say, they've been trading a lot in OTC these days, right? We've obviously got Deribit, we've got Solana, Matic, and things like that in the front end of the curve. But are you seeing a lot of flow in altcoins?
There is a lot of interest from different players. A lot of the flow is coming from the unlocks. So all the assets that have a very heavy unlock program are providing a set of new players that are looking for hedges, monetization, and financing. And this is where the existing market looks not sufficient to the demand, because obviously all these transactions require OTC bilateral agreements, and this is where Deribit or other venues can play a role, becoming a centralized venue for this type of activity.
Mm-hmm.
And what is the so if an institution wants to trade with you, how would they get in touch?
Normally, we rely on standard professional existing relationships, and the typical setup is an ISDA and a CSA.
Yeah.
And then what's the plan? What's the plan on altcoins? Do you see us listing longer dated maturities anytime soon? Things like that?
I think first the liquidity has to build more sufficiently on Solana, XRP, and Matic before we would then start to extend it, because the longer dated will generally have less liquidity. And as an exchange, what's very important for us is that there are those people quoting it, so that we have fair mark prices, so we understand when to liquidate people, and understand, like, users can understand their equity, leverage that equity fairly. So it will take, I would say, it's still early days. I think maybe in 6 months we can reassess that.
Mm-hmm.
And then we're also thinking about branching out into more altcoins. But first, let's see how the market reacts. I think options in general in crypto are a growing theme. Like, if you look at the traditional markets, options are actually trade multiple times the number of futures. It's something like 4x. It overtook futures in terms of volumes.
It's
and
amazing.
Yeah, and you see this kind of pattern that you expect. It's just crypto living TradFi in another time. It's first you had spot, futures overtook spot, then you're going to have options, which is gaining share against the futures, but it's just a question of time for that to kind of flip.
Yeah, and it's definitely not there yet, because it's like, you look at where the gamma levels are on options, and they don't really have much price impact, right? It's just, would you agree with that? Because you're in the option space as well, like running positions, like the stickiness that you get in TradFi around big gamma strikes, and how it almost dictates where the spot's going to go into a big expiry. We don't really see that in crypto, right?
No, it's difficult to have references, and actually this is a limitation also for the altcoin expansion. I think also the definition even of the forward, even before going to the vol, it's very difficult to have a unified, standardized level for that, for a lot of alts.
When your funding rate's winging around like a madman, it's quite hard to pin down that forward, right? It's true.
I mean, sometimes you see it on a very micro level during the settlement period with these big strikes and moves.
Mm-hmm.
But those might be more on Deribit moves, and then there's arb plays in the futures between the different exchanges. So there are some interesting dynamics, but they are very much more for like higher frequency traders.
Mm-hmm. Mm-hmm.
The other big limitation for the expansion of this type of activity is dictated by the absence of standards for collateral management. It will be difficult, first of all, to define who is the calculation agent, how you evaluate this collateral, and how do you detach credit risk from market risk.
Mm-hmm. Mm-hmm. All right, guys. Well, I think we'll call it a day on this week's episode. Thanks, everyone, for watching. Don't forget to like and subscribe. And thank you guys for stepping in for the big man himself, who's on holiday for another week. So he won't be back next week either. He'll be back the week after. We'll catch you all next week. Cheers.